If you are planning on buying or selling Kamloops real estate in 2026, this is not the year to wing it. I'm seeing some buyers and sellers make the same mistakes right now, and the difference is in this market, those mistakes could be a lot more expensive than they used to be. One wrong assumption and one bad move or one missed opportunity could easily cost you tens of thousands of dollars. So today I want to walk through the 7 biggest mistakes to avoid in 2026, especially here in Kamloops, based on what my team and I are seeing every single week in real conversations and real negotiations. This market sits in a bit of a middle ground. The interest rates have stabilized, but they're not low. The inventory is higher, but not everywhere. And the buyers have some leverage in some situations, but not every situation. And sellers are still adjusting their expectations over the past couple years. While this is not a panic market, it's definitely not a forgiving one either. Strategy matters more than speed, and good information matters more than the headlines. Before we get started, I'm Scott McDowell, and I run a real estate team here in Kamloops. If you're planning to make a move in and around Kamloops, my team and I are happy to guide you every step of the way. Reach out using the contact information in the description below, and if you found this video helpful, make sure you give it a thumbs up and subscribe to our channel, or share it with somebody else who's thinking about making a move in Kamloops in 2026. Make sure you check out all of our social channels for great deals, tips, and opportunities in today's market. All right, let's check out the 7 mistakes to avoid in 2026. Mistake number 1, waiting for the interest rates to drop. This is probably the most common mistake that we're starting to see in 2026. Right now, the expectation is that the Bank of Canada is largely on pause for the year, which means that the variable rates are likely to hold fairly steady for the year. Now, we're definitely not expecting any major cuts, but we're not expecting any major increases either. Now, where people get confused is with fixed rates. Fixed rates aren't controlled by the Bank of Canada. They're more they're tied to the bond yields. And late in 2025, we actually saw the fixed rates tick up a little bit as bond yields moved higher. So a lot of people have been sitting on the sidelines waiting for the rates to fall, when in reality, the drop may not come anytime soon. All right, so this part I really want to stress. If you're looking at buying a home at any point in 2026, make sure you talk to your bank or mortgage broker and get pre-approved today. You can lock in today's rate while you continue to look over the next 90 to 120 days. So if the rates go up, you're protected. If the rates go down, you get the lower rate. There's absolutely no downside in being prepared. And definitely have a conversation with a mortgage broker. Shop around your rates. A lot of times we're dealing with a lot of clients right now that are really getting kind of pushed around by the top 5 banks. They've been clients with them over for a number of different decades, and they're really taking the longest time and asking for a couple more days and definitely not getting the best service and getting the best rates. Have a chat with a mortgage broker. They can shop you around to 60, 70 different lenders for the right rate, right mortgage for you and your specific needs. So definitely shop it around, check out the rates, and have that conversation and shop it around. All right, my mistake number 2 is overpricing your home just to test the market. For sellers, this mistake can quietly cost you the most amount of money. Traditionally, your first 2 weeks on the market is the absolute most important time on the market. This is when the serious buyers who've been watching closely, the alerts and the PCS searches are firing, people's attention is at its absolute peak. So when a home is overpriced, it doesn't create negotiating room, it creates a lot of hesitation with some buyers. The buyers end up pausing, the showings slow down, and instead of competition, you get a lot of silence and a lot of less showings, if not no showings at all. And then what happens is you start looking at reducing your price, and buyers start to begin what is happening with the property and what is wrong with the house. So in today's market, pricing correctly from day one gives you far more leverage rather than chasing the market down later. All right, my mistake number 3 is ignoring the micro markets in Kamloops. This one's huge in Kamloops. So Kamloops is not just one market. It's a lot of different neighborhoods, a lot of different price ranges, a lot of different property types, all of them behaving quite differently. Sometimes it's even street to street. Right now, we're seeing a lot of segments sell quite quickly with strong demand, while others sit with multiple price reductions and very little activity. So if you're making your decisions based on broad news headlines or province-wide stats instead of exactly what's happening in your exact pocket of the market, you're likely working with wrong information. All right, my mistake number 4 is thinking that a slower market means that you can lowball everything. This is a very common mistake that buyers are making right now. Yes, the market has slowed over comparison to the peak years, and the buyers have a little bit more leverage in many situations, but this doesn't mean that every single listing is a deal. And it definitely doesn't mean that every seller is desperate to sell their house. And some homes are priced correctly, and some sellers are firm. And some of the best listings, the ones that are in really good condition, well located and priced right, still attract attention, and it's sometimes in multiple offers. We've definitely seen some of our buyers miss out on some great opportunities because they went in super aggressive, damaged the negotiation, and then end up chasing for the next home at a higher price. In 2026, the smart negotiation beats aggressive negotiation every single time. All right, my mistake number 5 is assuming that the asking price is a real price. I know that's contradictory to what I just said here, but in this market, the asking price is just a starting point. The true value comes with taking a look at the most recent comparable sales, the condition, the layout, the location, the timing, the seller's motivation. It's not just the number that's on the listing. So quick side note to this is that the BC assessments just came out. And one thing to really keep in mind is that the market value is not your BC assessed value. One thing that's pretty common in around this time is that we get some calls from sellers or some buyers. They take a look at the BC assessed value and that they assume that that's close to the value. Now, one thing I do ask with this is, say if you put $100,000 into your house, got new kitchen, paint, flooring, you put a basement suite in, you would expect to see your value, grow by at least $100,000, if not even more. But the reality is the BC assessment doesn't see this. They're not going into every single house. They're not inspecting every single property. They're not seeing what kind of renovations are increasing your actual market value compared to your BC assessed value. So definitely take the BC assessed value as a little bit of a grain of salt when you're taking a look at the prices. So what we're seeing right now is that we're seeing deals won and lost based on things like possession dates, condition, financing, flexibility, some inspection terms. Do you have to sell your house in order to purchase, or do you have some flexibility to offer somebody who might be looking for that next house? Maybe you can offer a longer possession. Maybe you can offer them a flexible possession to maybe look for that house without having the concern of selling their house. We actually recently negotiated a deal out in Brock. We provide that flexibility, and we definitely were able to get a really good price for our buyer. So definitely making sure that you're taking a look at all the factors, not just the price in 2026. This year, price is only one lever. Strategy is what actually gets the deals across the finish line. All right, my mistake number 6 is not being ready when the right home shows up. This one definitely catches some people off guard. So even though the overall market feels slower, the good homes that are priced well are still moving quite quickly. Buyers right now tend to assume that they still have some time, but when the right property hits the market, the hesitation can definitely cost you the perfect house. Ironically, the homes that people really want are selling fast, and the homes that with issues, poor pricing, bad presentation are the ones that are sitting. What's important is that you have a firm grasp of what's going on in the market, making sure that you know what the pricing has been happening for that kind of segment and that kind of property. Make sure you have your pre-approval and your budget set up, and so much more. In today's market, preparation matters a whole lot more than urgency, and being ready allows you to move confidently when the deal counts. All right, my mistake number 7 is trying to do all this alone by yourself. This is where all these mistakes tie in together. The margin for error right now in 2026 is razor thin. The right strategy can save you or make you tens of thousands of dollars, while the wrong move can quietly cost you just as much. While online information is helpful, it doesn't replace local expertise, real negotiation strategy, and understanding how today's market actually behaves. 2026 is definitely not the year to guess. So make sure you have the right team of experts to help you through every step of the process. If you are planning to buy it or sell a house in Kamloops in 2026, my team and I would love to help build you a clear, pressure-free plan. Even if it's months away, a simple conversation now can save you a lot later. My contact info is in the description below. If you found this video helpful, make sure you subscribe so you don't miss what's coming next. Until next time, bye now.